Hello, everyone. Today is May 2nd, 2014. My name is Dave Landry from davelandry.com. This is my website, but this is not why I'm doing this presentation. I'm getting a few questions to go over the open portfolio and explain what's in that. Just so you know, I am author of The Layman's Guide to Trading Stocks, so if you want to pick that book up, I would appreciate it very much, and thank you for that. The link is on my website right here. Let's take a look at the slides, and I'll show you the open portfolio here in just 1 second. Before we do that, this is the disclaimer screen. As you know, all predictions are about the future, and a lot of stuff can happen between now and then. This is a short version. The long version was on the prior slide. Just back that up a little bit and hit pause and check that out, or see other disclaimers, that and other disclaimers, I should say, on my website. Now, this is what we want to talk about today. This is my actual spreadsheet from my trading service. Let me show you how this is set up. We use a hypothetical 100K account. We assume there's always 100K even in the account. I don't actually compound in the open portfolio. I did a video out there, though, where I show quarterly compounding, so check that out if you get a chance on YouTube. Risking 2% per trade. That means each trade is going to be $2,000 at risk if stopped out. You don't buy $2,000 worth of a position. You take the protective stop. In this case, it was 2 points away, and you divide 2,000 by that number. So 2,000 divided by 2 obviously equals 1,000. By the way, the math is already done for me down here. And what I do is I split that into two positions. One is going to be my trading loaf, what I call a trading loaf, and the second loaf is going to be my trending loaf. So the math is done in a spreadsheet. The point I'm trying to make here is if you want this exact spreadsheet or one very similar to it, just shoot me an email and I will give it to you, so the math's already done. Now, let me walk you through the rest of the spreadsheet. Anything highlighted is an open position. Anything that's not highlighted is a closed position. So last night, this position closed out during the day. Yeah, it closed out during the day yesterday, so I left it in for one last day last night. This will actually come out of the portfolio today. We made $1,000 on the trading loaf and only $200 or $250 on the trending loaf based on a 100K hypothetical account. Okay. Now, these are following the system mechanically, meaning that if I say to get in at 13, you were able to get 13 on the fill within reason. If, let's say, the stock gapped to 14, then this would actually have 14 here. Or if there was a fast move around the open, this number might be a little bit different based on either a real trade or a time and sales type of fill. But these are things followed mechanically. If I say get out at 15, then it hits 15, then you got out at 15. In the real world, I would recommend that you use a little bit of discretion. See the second half of Layman. See my webcast for more on that. And I do a free webcast every Thursday, by the way, at 11 o'clock Eastern. And I'll show you some more information on that in just 1 second. So here's the profit and loss based on the number of shares bought. And then this is self-explanatory. This is where we got in. This was the price we exited. This right here was the current price as of May 1st, 2014. This is how much we made on the trading loaf, and this is how much we made, hopefully so far, and this number continues to grow, on the trending loaf. The real money is in this part of the trade. Ideally, we want to see that trade be many, many, many times the initial amount. In fact, in case you're wondering what's going on up here, this is a position that's still on based on a discretionary call. This triggered around, or I should say triggered right at 5.5. It hit the initial profit target, and then came down after a few weeks. It just barely nicked the the protective stop, which had been trailed higher to 9 points a share. And then it took off again. In a case like this, that's a discretionary call to stay with the position. But it's not in the mechanical portfolio down here because everything is tracked on a mechanical basis. So even if it comes to 9 or drops to right around 9 and then takes off again, and you should stay with the position, I actually track it mechanically as being stopped out. For instance, there was one just 2 days ago that got within 3 cents, or actually 4 days ago, 3 cents of the profit target. Personally, I think that's really close enough. Go ahead and take profits. But mechanically, it actually stopped out of the portfolio. Anything in orange is new action. These positions didn't hit new highs, so there was no new action to be taken over here. So it's basically a maintained stop, and should have maintained stop down here on this 1, 2. And again, this is new positions down here. I've got it X'd out because it's a current position, or it hasn't triggered just yet, I should say. So that's it for the portfolio. Again, 2% risk, which means it's $2,000 per trade divided by the risk on the trade, and then you take those shares and you view them as two lows, one to flip out, hopefully for a swing trade profit, and one to hold on to for a long, long time, hopefully for a big profit, something like this. Okay? Any questions? DaveLandry.com. I do answer my own emails. Let me just show you a couple things on my website real quick. If you have time, check it out. There's a lot of good stuff on my website, if I say so myself. Right here's my daily column, which I call Random Thoughts. You can access that through my website, or an easier way to get it, just click on the free newsletter here and you'll get it every day in your email. Once a week I do about an hour and a half long seminar on Thursdays, or a webinar, and you click here to sign up for that. Any other announcements, if you just scroll down on my website, all the announcements are right here. A couple things to point out to you. One, I've got some free videos here, and also under education there's a plethora of information under free education, hours and hours, videos and PDFs and things of that nature. It should keep you busy, I should say, for hours and hours. And one thing I'm quite proud of, this is stock selection webinar. Click on that for more information. Right now I'm running a special. If you buy the stock selection webinar, you get an entire year of my service free. Any questions? Again, DaveLandry.com. Thanks everyone, and have a great day trading.